Are you 65 or older and worried you filed your taxes and missed the new $6,000 senior deduction? You don't have to lose it. Let me prove it. I read the Internal Revenue Service newsroom page and the official Schedule 1A instructions. The deduction is real. Here are the 3 paths to still claim it. Amend your filed return, use your extension, and lock it in for next year. Let's go. This video is for educational purposes only and is not tax, legal, or financial advice. Talk to a qualified professional before making any decision about your specific situation. My name is Eric. I'm going to walk you through each of the 3 paths to claim this deduction in order, show you the federal rule behind each one, and end with a 1-page action plan so you can do this yourself this week. Before we get to the 3 paths, you need to understand exactly what this deduction is, because that is where most of the confusion starts. Congress passed a new tax law in July of 2025, and buried inside it is something the service officially calls the Enhanced Deduction for Seniors. Here is what it does. If you are 65 or older, you can subtract an additional $6,000 from your taxable income before the government calculates what you owe. That is per person. So if you are married, both of you are 65 or older, and you file jointly, the number doubles to $12,000. This is on the Internal Revenue Service page titled One Big Beautiful Bill Act, Tax Deductions for Working Americans and Seniors. And the single most important detail, the one that trips people up, is this. The deduction is available whether you take the standard deduction or you itemize. You do not have to give up your standard deduction to get it. It stacks right on top. The service says it plainly on that same page, that this new deduction is in addition to the current additional standard deduction for seniors under existing law. So this is not a replacement. It is extra. Now, it is not a tax credit, and I want you to understand the difference because it changes the dollars in your pocket. A credit comes straight off your tax bill. A deduction comes off your income first, and then your tax is figured on the smaller number. So what the $6,000 is actually worth to you depends on your tax bracket. If you are in the 12% bracket, the full $6,000 deduction saves you about $720. If you are in the 22% bracket, it saves you about $1,320. That is real money. And for a lot of seniors on a fixed income, that is a month of groceries or a chunk of a property tax bill. There is an income limit you have to watch. The deduction starts to phase out once your modified adjusted gross income goes above $75,000 if you are single, or $150,000 if you file jointly. Below those lines, you get the full amount. Above them, it shrinks, and at higher incomes, it disappears entirely. And one more thing on eligibility. You have to have turned 65 by the last day of the tax year, which for the 2025 return means you were born before January 2nd of 1961. That is the rule. It runs for tax years 2025 through 2028, so this is a 4-year window. And then it is gone unless Congress acts again. Here is why so many of you may have missed it. This deduction is brand new. There is a brand new form to claim it called Schedule 1A, and the senior deduction sits in Part 5 of that form. If you filed early, if you filed on paper, or if you did your own taxes before you understood the new law, this is exactly the kind of thing that slips through. The tax software mostly catches it now, but paper filers have to complete Schedule 1A by hand and attach it. So let me show you the first path to get the money back if you already filed without it. Path 1 is to amend your already filed 2025 return using Form 1040X. This is the amended return. If you filed your taxes for the year and you never claimed the senior deduction, you are not stuck. You file Form 1040X to correct the return. You attach the Schedule 1A that shows the deduction, and the service processes the difference and sends you the money you were owed. Here is the deadline that matters, and it is generous. To claim a refund, you generally have 3 years from the date you filed your original return, or 2 years from the date you paid the tax, whichever is later. That is straight from the service's own page on amended returns. 3 years. So there is no rush that should push you into a mistake, but there is also no reason to leave your money sitting with the government. Let me show you what that looks like with a real example. Consider Dorothy, 68, a single filer. This is a composite based on common situations the service describes, not a real person. Dorothy filed her return early, back in February, before she had ever heard of the enhanced senior deduction. Her income was well under the $75,000 line, so she qualified for the full $6,000, but she never claimed it. Once she learned about it, she filed a Form 1040X, attached the Schedule 1A, and because she is in the 12% bracket, she got back about $720. That is money she would have simply lost if she had assumed it was too late. It was not too late. And for most of you watching, it is not too late either. Now the part most retirees miss about the second path. Path 2 is for those of you who did not file yet because you filed for an extension. If you sent in your extension request back in the spring, you did not miss anything at all. Your return is not due until October 15th of 2026. That is the extended deadline for the 2025 tax year, confirmed on the service's own filing pages. So you have not lost the deduction. You just have not claimed it yet, because your return is not even due. When you sit down to file that extended return, this is your job. Make sure the person preparing it, or the software you are using, completes Schedule 1A and puts the senior deduction on it. Do not assume it is automatic if you are doing anything by hand. The extension gave you more time to file, and that extra time is exactly the window to get this right the first time, instead of having to amend later. If you are on extension, this is the cleanest path of all. You are not fixing a mistake. You are just filing correctly the first time, with the deduction included. If what I'm showing you is useful, hit the subscribe button and the notification bell. That's what tells YouTube to push this kind of plain English retirement walkthrough to more retirees who need it. Too many seniors are leaving money on the table simply because nobody told them the rule exists. And every subscriber helps this reach one more person who could use an extra $700 or $1,300. And if you want the one-page checklist version of this episode, the link in the description has my free senior deduction claim checklist, so you can walk through it at your kitchen table with your own return in front of you. Path 3 is about looking forward, and it is the one nobody thinks about because they are so focused on the past return. Remember, this deduction does not just apply to 2025. It runs through tax year 2028. So it applies again for your 2026 taxes, the ones you will file in early 2027, and again the year after that. Here is the catch. Just because you claim it once does not mean it carries forward on its own. Every single year in that window, you or your preparer has to make sure Schedule 1A, Part 5 is completed and the deduction is on the return. So Path 3 is simple. Set a reminder for yourself right now. When you file your 2026 taxes, check for that senior deduction line before you sign. If you use a preparer, ask them directly. Did you include the enhanced senior deduction on my Schedule 1A? Make them confirm it. This is a 4-year opportunity, and the difference between claiming it every year and forgetting it in a busy filing season could be $2,000 or $3,000 across the life of this law. Look at your own situation against that window right now. If you are 65 or older and under those income lines, this is money the law says is yours, every year through 2028. Here is your one-page action plan. 1. Pull out your 2025 return and look for Schedule 1A, or the senior deduction line. And ask yourself honestly, did you actually claim it? 2. If you did not, and you already filed, file Form 1040X to amend. And remember, you generally have 3 years from your filing date to do it. 3. Before you claim it, check your modified adjusted gross income against the $75,000 single or $150,000 joint phase-out line to confirm you qualify for the full amount. 4. If you are on extension, put the deduction on the return that is due October 15th of 2026 and make sure Schedule 1A is attached. 5. Mark your calendar to confirm the deduction is captured again on your 2026 return because it is available all the way through tax year 2028. Every one of those steps you can do yourself or hand to a preparer with confidence because now you know exactly what to ask for. Same person, same age, same income. Claim the deduction, and a senior in the 22% bracket keeps about $1,320. Miss it and hand the government the same $1,000+ for nothing. The only difference is whether Schedule 1A got filled out. That is it. That is the whole ballgame. $6,000 per person, $12,000 for a couple, and 3 separate paths to still claim it. My next video is called Your 2026 Social Security Raise is Already Gone. Here's where it went. If you filed your taxes already, tell me in the comments, did you claim the senior deduction? Yes or no? I read every single comment, and the most common questions become future videos. I will see you in the next.